Welcome to today's income tax class. This is the problem taken from Gaur and Naram for under the chapter capital gain, and this is problem number 13. This is the example for this problem is with exemption under section 54 F, right? 54F. In this, we are given with three categories of assets. Consider assets sold off. Number one, first, the first type of asset is purchase, and in the year purchase in the year 1/3/2003. Purchased two plots on 1/3/2003 for rupees 24,800 and another on 1/3/2022 for 22,800. See, please underline that point. Purchase on 1/3/2022. So the present year is 23-24. This asset held by the assessee for less than 3 years, because since it was a purchase in the year 1/3/22, so it is a short term asset, and that asset is sold for 80,000 and purchase on 1/3/2022 less than 3 years, so it is short term capital asset. When the short term capital asset is transferred, obviously that gives you the short term capital gain. No indexation, right? Nothing is applicable for that. Straight away we can take short term capital gain 57,700. Okay. Then second category of asset, the nature of asset is plot. It was purchased in the year 1/3/2003, and another one is he purchased another one for 1,90,000. Okay, that was a purchase that 1,90,000. It was a purchase on 1/3/2003. These two assets, that is plots. These two plots are held by the person for more than 36 months, so long-term capital asset, and that will yield the long-term capital gains. Okay, the sale consideration for this asset is 1,90,000 since it was purchased in the year 1/3/2003. The respective related index point we have to apply. So sales consideration, this was sold for 1,90,000, then 24,000 into 331 divided by 105, the related index point we have to apply. That comes to 78,179. Then second category is, this gives you the long term capital gain, minded. So the sale consideration is 1,90,000 and this gives you the amount of income 1,11,821. Then third one category, which is jewelry. That jewelry it was sold for that jewelry it was sold for 2 lakh rupees, which had purchased for 52,000 on 1/8/2004. That is also held by the person for more than 3 years, that is 36 months. So 52,000 into present index point is 331, then divided by that related, that is for 2004 1/8. So we have to take the index point for 2004 5, that is 113. Okay, so that amount is 1,52,319. Then balance is long term capital gain, and the total capital gain, that is for the plot, it has the sales value of 1,90,000, and this jewelry it is having the sales value of 2 lakh rupees. The total long term capital gain that comes to 1,59,502. And what type of exemption we can claim, what under what section we can claim the exemption for this problem? Simple. You are given with the point, he invested the full consideration of all these assets in the acquisition of the new house. So normally for 54, when house is purchased, when house is transferred, it is invested in another one purchase of the house, it is 54. Agricultural land is purchased, invested in the purchase of agricultural land and capital gain account scheme, then 54B. Whereas in this case, we are not given like that. Related asset is purchased. No, it is not like that. Various block of assets are transferred, and the purchase for the purpose of exemption is all the investments are transferred for the purchase of a new residential house, then it attracts section 54F. Okay, how to take that amount of investment? First asset is transferred for the consideration is 80,000. Second asset, it has the sales value of 1,90,000. Third asset, it is having the sales value of 2 lakh rupees. Total comes to 4,70,000. Then proportionate exemption under 54F only we can claim, not straight away for the value of purchase. Okay, when multiple assets are purchased, when multiple assets are transferred and purchase of the house, then we can claim the exemption under section 54F. Okay, so in this case, what is the formula for this long term capital gain? What you derived here, the total amount of long term capital gain 111,821 plus 47,631, that comes to 159,502 long term capital gain into amount of exemption what you made the investment, that is based on the value of three assets. So 4,70,000 divided by total amount of sales consideration, that comes to 190 plus 3 lakh rupees. So yes, 190 plus 2 lakh rupees, sorry, 2 lakh rupees, that comes to 3 lakh 90,000. If you simplify this formula, then you will get value is 192,220. Okay, 1,92,220. Whereas now this is the value of exemption, this is the eligible amount for exemption. Whereas your present available long term capital gain is 1,11,821 plus 159. So the full value of a capital gain is exempted. Since the calculated value of exemption is more than the available value, so you cannot claim the exemption with the negative figures. So we are taking the full value of exemption is claimed off. So full value is exempted. Taxable long-term capital gain is 0. So in this problem, the taxable capital gain is only because of the short-term capital gain, that comes to 57,700. Okay. So please mind it carefully. When you are having different blocks of assets or any one particular asset, amount is invested in long-term amount is invested in purchase of the new asset, new house, residential house, then you can claim exemption under section 54F. Okay, different types of assets are sold off and purchase of the new asset, then you can claim the exemption under section 54. Mind it carefully. If you are purchasing the bonds, 54 EC, compulsory acquisition of land, industrial undertaking, then 54D, then purchase of agricultural land, 54B, purchase of a house, sale of a house, then it is 54. Whereas here it is quite a different one. So we have to claim the exemption under section 54F. Okay, this is another one important problem. You please try related problems for want of experience.